Alright, hello everyone out there. This is DayTraderRockStar for DayTradingRadio.com, and I have a little educational video for you today. This one is one of my favorite patterns to find. It's a very rare pattern. It's like a rare snow leopard out there. It's not actually that rare. It's just I want to teach you how to find these setups and actually profit with them. You look at an average chart, you see a chart that moves up in waves, a stock that stair steps up, takes 3 steps up, 2 steps back, 3 steps up, 2 steps back, 3 steps up, and normally you'll see this pattern play out in a lot of different stocks. Well, you got to be able to recognize that and start to be able to place your trend lines in there. It's very important to learn your trend lines. Now, a trend line is basic charting 101. You take a point in the chart, 2 points in the chart that make a low or a high, and then you could put a line up against those lines, and that's going to basically give you a line. 2 points basically makes a line, and then you extend that line out, and you'll probably find out that line will end up being an important factor in the stock's support line or resistance area as it trades in the future. So in this case, you could see this trend line that was formed here in January, and then in March we extended that out. It was touched again in May, and again in July, and seeing right on top here a very similar trend line right on top, basically, as the stock went up to the top part of this channel line. Now it becomes a channel, and pushes down off of it, comes down to the bottom part of the rising trend line, pushes up to the top, rising. So this, once you start to see this channel line, you could really start to profit off of a stock. You can actually buy at the low end of the channel and sell at the top end of the channel. Now, it's important to get that eye. So what I find really great, if sometimes you don't even notice that, it's just for whatever reason you just don't notice things like that. You might actually just see something else, like we might be zooming in, you might not be looking at the big picture, and you might be just saying something like this, and all of a sudden you're noticing we have a downward sloping channel here. Alright, so a downward sloping channel, like in this stock right here, DMND, Diamond Foods, is a very bullish setup. Any type of downward sloping pattern usually breaks up to the upside here. So we have a little downward sloping pattern here. We'll just want to adjust this a little. You always want to use your trend lines to the closing price of the bars. You don't want to really take the tail ends. You want to take the closing prices. And again, you can see this downward sloping trail. Now, I was actually looking at this stock right about here, and then we zoomed out here a little, and you can actually see that we're in a downward. Then I looked out here a little further, and I said, wow, look at this. We have a nice upward channel right here. So you have a nice upward channel line here, which we're pulling back to resistance, yet we're also on a downward channel line on a channel line support line there. And right here, two powerful support lines right there. And just want to get this out of here. Again, I'm doing this video late night. I just want to get this out. You can see hundreds of these educational videos at the site DayTradingRadio.com, or on YouTube, or anywhere else you could find them. I broadcast the markets every day and bring you these setups live as they happen. So again, this is a very powerful support line when two trend lines actually cross and meet. Now, really, what clinches this whole thing is the stochastics are in an oversold level here. So that's the third indicator, and I use 5 indicators: trend lines, stochastics, moving averages, and stock patterns, and a couple other ones. But the combination of a trend line, the stochastics being oversold, and a pattern, which is a channel pattern, or a just a nice little pattern here. You could zoom out here. What happens after that is you can see the explosion in that stock, and it just pushes right up here, and the stochastics move up with it. So that's a great example of a situation you should look for. So always pay attention to your trend lines. Watch for the double trend lines. I call them like two trend lines converging on each other, where you have support on both trend lines. at that level, and that's a very important level. Just to give you a couple other examples of a similar setup here, I got a couple other ones here for this week actually that are setting up. Quest Communications is actually a similar setup here on Quest Communication. You can see a trend line here. Won't even look at the top trend line here. We'll get rid of the top trend line. This is Q. Q is the name of the Quest Communications. You go all the way out to November, and you can see this trend line that hit November and then hit May, and just extend it. So right when it comes up here in July, you can see it coming down, but also in July, you can actually, we zoom in here, you can see that we're in a nice downward channel line here. So the combination of that downward channel line, the price pulling back down to the channel line here. Remember, it's important that you make that good trend line just by connecting the lows here, and then extend that trend line out, and that trend line comes right down to here. We came right back down to the lower trend. Even if this trend line wasn't even there, it would bounce off of this. But just because this trend line moves all the way up, and this has a longer trend line here that goes all the way out for 6 months, 7 months, this makes this area so more important, much more important. So this is a really nice setup here, and you can see the reaction from that. And this is a cheap stock too. And now we've actually pulled up here, and this one's actually on my watch list for going into this week. So that's another good example of a dual trend line crossover here. And one more ORLY here. Similar situation here. Again, another upward trend line here. In this case, you can see the multiple times that the two channels converged at each level, and at each level it exploded higher. And right here again, we moved up higher there. So there's the 3 good examples of channels within channels. We're going to call it. That's what we're going to call it. Channels within channels. You buy the support of the lower trend lines of each of the channels, and when they converge over to the like pretty much they just mark that X marks the spot there. That's where you want to look for your entries there. If the stochastics move up or actually set up exactly at the same area where you get an oversold level here, that's perfect. Again, anytime you get an oversold stochastic level, pulling back, you can see how these set up, and there's perfect buy signals. So this is DayTraderRockStar. I hope you enjoyed this video. Definitely check out the site. Broadcasting the markets live every day. You get to see my camera. You get to see the setups as they're happening, and just come and check it out. DayTradingRadio.com.